Good morning, everyone. Thank you for joining us for a 1-hour webinar on FBO organization in the United States, a primer and an update. I'm Beth Sork, the CEO of the IIB. The IIB is the only trade association that represents the U.S. operations of internationally headquartered financial institutions. We are so happy to offer today's webinar as a benefit of membership. If you aren't an IIB member, please reach out at the conclusion of today's program, and we would be happy to discuss the benefits of IIB membership with you. So today we're going to hear from some terrific experts on the important considerations facing internationally headquartered institutions who want to operate in the United States. After the presentation, there will be a Q&A session at the end of the session. So please submit your questions throughout the program using the Q&A feature located at the bottom of your screen. We will be offering CLE credit for this session. An email was sent to you with the CLE affirmation forms earlier today. Thank you very much to Alston and Bird for helping to facilitate the CLE certificates. Also, we'll be distributing the presentation to you after the webinar. So today, I just want to thank Richard, Rich, Cliff, and Bo for joining us and sharing your knowledge and expertise. We're so excited to hear from you about this important and evolving topic. And thank you very much to Alston and Bird and Deloitte for supporting the IIB as a gold member. We are stronger because of your membership. With that, I'll hand it over to Richard Rosenthal to take it away with presenting on this topic today.
Thank you, Beth, and it's an honor to work with the IIB, and we've been working together for a long time, and we appreciate your support as well. My name is Richard Rosenthal, and I lead Deloitte's bank regulatory practice and a lot of our business and entity transformation work, which includes entering the U.S., setting up branches, setting up new banks. We've got some great panelists, which I'll introduce in a little bit. If we go to the next page a little bit, I'll kind of set the table on the agenda for today, which I hope has something in store for everybody. We're kind of really in a moment where a lot of new companies, new banks, foreign banks are trying to enter the U.S. We have probably one of the most commercially advantageous regulatory setups that we've seen. And so we have a mixture today of folks attending this that are looking to enter the U.S. for the first time. But we also have existing foreign banks that are looking to potentially optimize their legal entity structure, or folks that just want a little bit of a primer on the options that exist and how foreign banks are set up in the U.S. So we intend to give you a landscape of the different legal entity options, what that looks like, what the regulatory landscape is creating for both opportunity and focus areas. We will look at the journey becoming a branch specifically, and what does that take? We'll look at that in detail. We'll look at some critical success factors, pain points. What are the regulators looking for? What's the brass tacks of the rating system and the end game? And then we've got a nice special feature with Bo Fears joining us, who's the banking commissioner out in Georgia. And I think it's a really unique update in terms of what Georgia's done and the opportunity that's created in the state. So between, Cliff, if we go to the next page, who leads Alston Bird's banking regulatory practice, Bo, we get the perspective of a state from a regulatory perspective in the state. Rich Mumford, who is a legend in the industry and one of my personal friends, who is a former state regulator himself, but also was a bank regulatory counsel for UBS. So he brings both perspectives. I hope we can have a conversation that brings it all together for the participants, so you all can have a good, healthy set of takeaways. I would double down on Beth's comment that don't be shy in the Q&A. Please drop your comments or questions. We will try to get to it at the end, and if we don't get to it, this collective group will get back to you with your question. So let's move forward. I'm going to start off with a little bit of a table setter on FBO operations in the U.S. And really the next slide gets a little bit into the different options for FBOs in setting themselves up in the U.S. We have federal and state branches, and when we'll get into the powers of each of these entity types, payment systems act as deposit insurance, but we've got different options: agency rep offices, non-banking subs, obviously what's going on with stablecoins and the Genius Act. There's going to be some interesting developments there. And then just typical depository institutions that offer FDIC insurance. When you look at the number of FBO offices in the US, which that does not include banking subs, you see a mixture of rep offices, state branches, agencies, federal branches. Each of these entities offers different banking powers, but I think it's also just interesting to look at kind of the FBO assets by office type, clearly state versus federal. You've got a little bit of a dynamic there. And on the next page, we kind of zoom out to where are foreign banks coming from in the US? There's some great data that is published by the federal regulators. If you go to the next page, Jake, that kind of lays out a little bit of FBO home offices by their country. And so you see Canada, Japan, both from a perspective of assets, but also just pure play number of entities. You can see some of the penetration those banks have in the US. And I think this is an important dynamic in general where the federal regulators and state regulators look to that home country for consolidated supervision or CCS. And so depending on the country that the foreign bank's coming from and the strength of that regulator and that setup often changes the way the US banking regulators look at that. And obviously the more precedent that exists, the more sophisticated the regulator is in that home country, in some respects makes it easier for that foreign bank to enter the US. We will dive deeper into the options folks have, the trade-offs, and some of their perspectives as we go forward. But I think this gives you a little bit of lay of the land in terms of where people are coming from. We are obviously seeing some evolution here, but maybe it's time to go a little bit to today. The regulatory landscape in the US, the opportunity that's created, why we're seeing so many market announcements. Jake, if you go to the next page real quick, I think with this new administration, we have seen a shift towards innovation and adopting a more business-friendly, commercially minded stance on bank creation. I think Jonathan Gould has said one of the biggest risks facing banks today is not innovating. And so regulators have made commitments to streamlining the application process, accelerating approvals for new entrants, whether that's de novo applications or whether that's coming through an M&A event. And so we are seeing, a lot of you all, some of you joining today's webcast, look at this as a once in opportunity to get a charter or to get a license and set themselves up for success. And so when you look at some of these quotes, you can see both Michelle Bowman at the Fed, Secretary Bessent, Jonathan Gould, looking at trying to make the process more straightforward, that the response timeline, the clarity on how the statutory factors that are actually applied in the application process more clear. And so another example is at the OCC, Stephen Lieberger has been elevated. He kind of runs all the licensing process for the OCC. That has been elevated in stature and importance in the OCC. So I guess, to kind of open it up to some of my panelists, and maybe Bo, I'll also turn to you, and Cliff, I'll come to you in a little bit. I kind of view this as, we haven't seen this. It's been this intersection. Frankly, regulators kind of saying, hey, focus on innovation, focus on, some of the core banking activities. Banking should be a business of taking some risk. And so we've got this setup of a very conducive environment. Bo, I don't know what your take is from the state and how you look at this. I think this will lend itself to some other remarks you'll make in further in the presentation. But do you have a perspective here?
Sure, and thanks, Richard. And as Richard indicated, I am the commissioner of the Georgia Department of Banking and Finance. I came to the department 12 years ago as their general counsel, and then a couple of years ago I was named senior deputy commissioner, and I have been the commissioner for all of 6 weeks, but again, sort of internally homegrown. Prior to that, I was at the Attorney General's office for 16 years, and the department was one of my primary clients. And so, Richard, really to your question, from my perspective, I think that this can, if you balance safety and soundness, consumer protection, and then at the same time, financial products can be delivered in a way that is economically viable for the entity. So all those three of those things can be balanced. And that's really the approach the department takes, and we've taken historically. To your point about traditional banking, The department has chartered, 5 community banks since the Great Recession, which isn't a lot. But then if you compare us to other regulatory agencies, we're really near the top. And on top of that, we've got 2 applications that are in the pipeline. We're talking to 2 other organizing groups. In the innovation space, we have our novel charter, the Merchant Acquirer Limited Purpose Bank Charter, or MALPB, and we have granted that to Stripe and to Fiserv. Checkout.com just recently submitted an app. We accepted the application from Checkout.com. We have another application in the pipeline, and we're engaged in some sorts of in-depth preliminary conversations with interested parties on Georgia being licensing these payment stablecoin issuers. I think from the foreign bank perspective, the department engaged in a multi-year iterative process, kind of trying to take the best from the OCC and the other large state players, kind of look at their laws and look at their rules. And our goal was to try to build up something that was, kind of robust prudential standards, but the same way try to get away maybe from some of these legacy requirements that don't really fulfill safety and soundness, and also trying to get some clarity, right? And in some of these areas. And what we did, the department did not do this by ourselves. We really relied on experts in the field. So worked closely with Rich, closely with Cliff, other players in the space, including the Federal Reserve Bank of Atlanta, to kind of identify pain points and then address those to the extent we can. And so, I will say that I am biased in this regard, but I think we did a really good job of balancing that so that it's viable for the foreign banks, yet at the same time safe and sound.
Well, that's appreciate your remarks. That is, I think, particularly the point about balancing safety and soundness and trying to take the high road on risk and controls, and we'll get to that a little bit later. But then there should be an ability to innovate, which I think you've set up well in the state. Cliff, I think you're probably seeing some of the same action Rich and I are seeing in terms of market activity, the landscape, the pendulum swing. Any landscape thoughts from your vantage point, Cliff?
Yeah, thanks, Richard. It's Cliff Stanford. I lead the bank regulatory practice at the law firm of Alston and Bird. Great to be with you all today. Thanks to the IIB for helping us put on this presentation. Richard, it's very much a new day. If you sort of compare and contrast this time a year ago to now, it's very much a new day in terms of the regulatory climate in the U.S. and sort of the reduction of frictions, as Bo was speaking to, sort of the pain points that had been in place for doing something innovative, sort of moving the ball forward, new charters, new options for banks. It's very much a new day. And I guess the other sort of comment I would add to that is, and Richard, you used the phrase pendulum swing, and that is very much true, is that there's a bit of a window. And, the administration is what it is today. The sort of climate is what it is today, but that can change. And so we see a lot of our bank clients very much sort of pursuing options now and moving forward now while the opportunity is there. And so that's the one comment I think I would add.
Thank you both. So why don't we dig in a little bit? We'll bring it down a level. So how do you go about entering the U.S.? What options do you have? How should you evaluate this? And many of you are beyond this step. You might already have foreign banking operations in the U.S., or you've already made a decision. I just think this page is kind of helpful, at least how we approach the problem statement. There's obviously, the M&A route. There's the de novo route. There's the partnership route. There's obviously banking as a service, or, different business models where you can partner with the bank and enter by potentially going down the finance company route or the money transmission route. Oftentimes in these, evaluating what makes the most sense, you're balancing things like speed. What are the financial impacts, capital liquidity? And kind of Rich and I, and I'm sure Cliff, you feel the same way, is what do I want to be when I grow up? What is the product or business strategy I'm trying to pursue? Because if certain things are important to you, like FDIC insurance or payment systems access or stablecoin issuance, the charter options change. And so I think being really tight on that. The risk and compliance impacts, what does it take to do this successfully? And on the talent side, and I think, Bo, you probably will test this, like the people to run the operation, the credibility, the skills, the experience. And so what we often do is our helping folks evaluate these things, answer these questions on the right, which I think gives you a little bit of a methodical way to figure out how you want to play and what are the impacts. From there, often the conversation shifts to fairly, I think probably one of the most complex regulatory systems in the world, with the 50 states and the number of banking regulators you have. But on the next page, I think Rich, you'll take us through a little bit of a discussion with Cliff on the differences between these charters, a little bit of 101, because I think it helps enable some of these design decisions I had on the previous page on, do you do a federal branch versus state branch? Do you need a subsidiary? But if you can help us navigate that, Rich, we would be greatly appreciative.
So thank you. My name is Rich Mumford. I'm based in Atlanta. I'm an independent senior advisor with Deloitte and have been for the past 5 years. And I just would like to give a shout out to the Deloitte team who put these materials together and who've had the privilege of working with over the last 5 years and in various capacities before that. I learned something working with these folks every day. Also, quick thanks to Beth and the IIB team, very timely and topical. Just another word about myself, in addition to being sort of a former regulator and a reformed lawyer, having spent 35 years in big law and big banks, the last 10 as head of bank legal in the Americas for UBS. What do I do every day? I focus on things bank regulatory, and that includes banks, bank holding companies, and banking as a verb. It's legal entity optimization, charters, licenses, and what we have been doing less of more recently, but something that shouldn't be forgotten is remediation work. So let me jump in here. We've got a couple of minutes at a high level to discuss licensing options. I'm going to touch on rep offices, branches, and bank subsidiaries. As the prior slide showed, 40% of the foreign bank offices in the US by number are representative offices. That is, obviously not insignificant. I think that reflects a few things. It's speed to market. It also getting feet wet. A representative office is not a booking entity. Unlike a branch, it doesn't accept deposits. It doesn't make loans. It doesn't engage in fiduciary or trust activities. It acts as a marketing arm, a representative arm, and to some extent an administrative arm of the head office and the bank itself. So it's the ease of entry is slightly higher. It's easier. The capabilities that are required are slightly lower. One thing I'll note as a technical point, although we don't see it frequently being a deciding factor given the type of entities that are entering the U.S., is that the finding that the Federal Reserve has to make for branch offices that they be subject to consolidated comprehensive supervision, that standard does not apply to a rep office. It's a slightly lower standard, but I think, Richard, our experience is, again, most of the entities we see are coming from countries with systems that would meet that standard. So let me jump up a level to a branch office. And these are offices, as Cliff will detail over the next couple of slides in a few minutes, that are, they engage in banking activities. They make loans. They can accept deposits, which we'll talk a little bit more about, have Fed access, can exercise trust powers. And there are questions. There are two ways to enter. There have been since the late 70s. One is through a federal branch that is chartered or licensed, I should say, by the Office of the Comptroller of the Currency and primarily supervised and examined by them. The other option is the state option, whether it's Georgia, New York, Florida, et cetera, where it's a dual system where both the state is involved and the Federal Reserve is involved. Now, what can these things not do? They cannot take FDIC insured deposits. Back in the day, they could. If you look at the Fed data, there are some grandfathered foreign banks that can still have FDIC insured deposit capabilities through their branches. But today, if you want to do retail business, you want to duplicate something you may have in your home country, which would be, corner downtown offices where you take deposits and you deal with, retail customers, you would have to do a bank subsidiary in the U.S., an insured depository, which obviously is its own entity, has its own capital, and something we have seen a number of foreign banking organizations do by acquisition or by de novo. So that's a very quick overview of these options. There are other technical issues on agencies and limited branches, but we're not going to get into that today. So Cliff, why don't we turn the page here and get into some of the decision making on federal versus state branches.
Sounds good. Thanks, Rich. As Rich sort of previewed, and I think it's been the case in my experience, where there are foreign banking organizations that are looking to enter the U.S. or look at their sort of options for, optimizing their strategy in the U.S. Typically, we look across the entire menu of those options that you just saw on that last slide, and each has its pros and cons, and Rich sort of previewed what some of those are. But one of the first sort of decision points, if you're looking at establishing especially a branch in the United States, is your choice of regulator, your primary regulator, and you do have a choice. And that is a reflection of the U.S. dual banking system, which is a historical and valued sort of aspect of our banking system in the U.S., that both there is a federal licensing agency, the OCC, which we've mentioned before, or you can opt for a state agency such as Bose leads in the state of Georgia, the Georgia Department of Banking and Finance, to license the branch. So there's a licensing is the specific term when it comes to a branch. And here you see some of the breakdown of the sort of primary considerations that may go into a decision in terms of your choice of regulator between the OCC or a state. And there are a number of states like Georgia that do license state branches for foreign banking organizations in the U.S. I think one key aspect of this is that all branches, regardless of licensing authority, so even if you do opt to, for example, have a Georgia state licensed branch, are also regulated and supervised by the Federal Reserve to a degree. And so in particular, one of the options that you want to consider here is whether you choose the OCC or you choose a state, is just to know going into the conversation that you've got the Fed as sort of a gating regulator and supervisor with regard to any foreign banking organization in the United States. Just ticking through some of the sort of considerations in choosing federal versus state branches, the scope of permissible activities is really very similar. And some of this is attributable to states that have, such as Georgia, a wild card authority that is the term of art for basically saying that a state institution can do what a federal institution can do also. So there's a lot of similarity there. You do get access to the payment rails, the Federal Reserve's payment rails for processing payments, also access to the discount window for emergency financing. Similar wholesale deposit authority, and Rich mentioned the fact that it's not FDIC insured deposits, but wholesale deposits over $250,000. And as mentioned earlier, payment stablecoins are a emerging sort of product offering in the banking system in the United States as a result of what's referred to as the Genius Act, which is a newly enacted law in the U.S. And under that law, it is crystal clear that a federal branch can issue stablecoins and engage in related activities such as custody, reserve asset management, fiat payments, et cetera, to issuers. It's a little less clear as to whether under the law, it's been written in the statute, as to whether a state branch can do the same. But we do anticipate some further clarity to come with regard to the ability of a state branch to engage in those payment stablecoin issuing activities. Maybe we'll go to the next slide for some further detail. So we do commonly see FBOs when they're deciding whether to enter the U.S. and whether they choose a federal or state branch, focus pretty clearly not only on the activities that are permissible for that branch and what their options are for their regulator, but also looking at sort of the, if you will, the financial aspects of sort of the required capital equivalency aspects of, you know, their balance sheet and what it means for their financial wherewithal in the United States. And so in doing so, the details matter here, but there are a couple of categories of sort of financial requirements that I want to speak to. One is asset maintenance requirements, and this is essentially attributable to what's referred to commonly as sort of the U.S. interest in the ring fencing of a balance sheet of a foreign branch. And that's essentially saying that there are assets that are maintained at a branch that are there for the purpose of, if you will, solvency to satisfy the liabilities that are also attributed to that branch. So there's some sort of balance sheet that represents that office as if it were its own entity, independent of the foreign bank parent. And so there are some distinctions there in between federal requirements and state requirements with regard to asset maintenance requirements, and the details matter there, but that's a key consideration. Separately, but also importantly to the financial discussion, is this concept of a capital equivalency deposit, which is the term used by the OCC for a federal branch, or an asset pledge requirement, which is the common term used by states such as Georgia for sort of similar purposes. And essentially what this is a pledge of support, if you will, in lieu of something like the Basel III capital requirements that would otherwise apply to the parent institution, but that backs the solvency and sort of wherewithal of the U.S. branch, whether it's a federal or a state branch. So for example, for a state like the state of Georgia, you see the detail there. It's measured by the greater of the capital required of a state bank, or 1% of average liabilities under a formula. And then there's also a distinction for a highly rated branch, so a well-managed, safe and sound branch that's, you know, assessed by the state for a different sort of characterization or different calculation of what that asset pledge looks like. And it's pledged to the department, to the regulator, for the benefit of the creditors of the branch. So again, key consideration in making a decision about federal versus state. For both, federal and state branches, the authorities do have the ability to at least know about, if not to ask questions of the branch about other affiliates of the foreign banking organization in the U.S. to assess the solvency and safety and soundness of the branch itself. There are differences in terms of multi-state operations between a federal branch and a state branch. A federal branch can essentially open additional branches subject to OCC authority across the United States. For a state branch, you have to go state by state to get licensing authority for additional branches in other states. And then trust powers are available to both a federal and a state licensee. Let's go to the next slide. I know that was a lot of detail, and we will be providing the slides so you can assess all of that independently. And this is a CLE code for those of you that are seeking CLE credit with regard to this presentation. If you'd please write that down. We'll leave that on the screen for a second. And then I will hand it back to Richard.
Thank you, Cliff. That was very helpful. We are now going to descend a bit into some tips and tricks, perspectives on a little bit on how to enter, but then, some prevailing, lessons learned from working with foreign banks that will be helpful both in the application process and beyond. If we go to the next slide, Jake, we can go a little bit into the application process. So what we talked about, if you look at bringing this presentation forward, doing that readiness assessment, figuring out what you want to do. You want to go down the branch route, the subsidiary route, what's your plans? There always is a little bit of a, what does it take? What can you leverage from your foreign bank? What can you leverage from your home country? And then working through the application and business plan process. We have seen, as we've discussed, a more constructive application process. Folks are still often doing pre-filing meetings. What's really important in this process is demonstrating the credibility of the people that will run the U.S. operations. We'll get into some thoughts here, but one thing that stands out in all administrations, all regulatory discussions is Who are the people that are going to be the U.S. physical people to run the operations that will be the accountability points for the U.S. regulators that demonstrate U.S. expertise? When you think about U.S. expertise, U.S. AML, U.S. risk management expectations, U.S. compliance expectations, there's unique regulations in the U.S. like fair lending. There are certain things on credit that are a bit different. And so what stands the test of time, to me at least personally, is the focus on people and talent and how that comes through. Clearly, when someone enters the U.S., there is obviously a heavy focus on the actual products, the business plan, the profitability of the U.S. operations. And then one of the tension points we'll talk about is, what does the foreign bank leverage from the parent, and how to demonstrate self-sufficiency, this theme of self-sufficiency, which is different for a branch than a sub. But how do you leverage parent systems and processes responsibly? How do you deal with regulations like Reg W, which force you to think about some things on market terms? And, I think that's some of the dynamic that's playing out in this process. Definitely more constructive, as we've discussed. The regulators are looking for sound business plans, but they're still going to be looking for some of these success factors, which we're going to explore on the next few pages. Go forward a slide. I'll start to dig deeper into some of these success factors. I talked about that leadership team and having high quality talent, and really being able to demonstrate in that process that you understand the U.S. risk management regulatory expectations, that becomes an important accountability mechanism, that whether it's risk, compliance, AML, the regulator understands who to go to, and that person has credibility, and that person has the tools at its disposal to handle and manage that domain. Regulators do not like to point north, south, east, and west and say, and I need to talk to my home country person. I need to talk to my person here. They really want to see some of this expertise here. Now, I think regulators are realistic too to say that, particularly with branches, you will leverage a lot from the parent. You will leverage a lot of process. You will leverage a lot of infrastructure. I think to me, the important becomes, how do you do that responsibly? How do you put service level agreements in place to demonstrate the U.S. can monitor performance? How do you demonstrate the systems you use are legal entity enabled and they can actually cut balance sheet and risk data by that branch, by that entity? How do you demonstrate that the policies and procedures respect things like U.S. GAAP, U.S. risk management expectations, U.S. compliance expectations? So having that documentation to demonstrate that. And I do believe there is a system of governance and decision-making that can be demonstrated through documentation and process. Obviously, size matters and complexity matters. Not all applicants and businesses will be treated equal. There's a lot of foreign banks that operate in the U.S. that are substantial, that their parents are systemically important, that they cover a wide range of activities. And obviously, some of my comments here will need to scale to those business models. The U.S. does have certain thresholds that require you to do certain things, like if you have a bank sub, to do capital planning, CCAR at 100 billion, that may change. Those thresholds are under review. But in general, some of these tips and tricks I still think hold various business models. On the next page, we go a bit deeper. I hope you find this checklist helpful. We will get you all of these slides, and I won't do justice to all of these points. You do hear in my remarks some common themes, but having that defined roles and responsibilities and a good governance structure. A lot of criticisms of foreign banks in the U.S. is that the U.S. lacks decision-making authority, lacks requisite accountability, and is too reliant on the parent for demonstrating control and oversight of the U.S. operations. Another common theme is not having a holistic view of risk. Sometimes certain booking models or certain ways things work, some activity, particularly with capital markets intensive businesses, book derivatives to London or book derivatives elsewhere, or have a way that things work across the both global and U.S. operations. So being able to demonstrate that there's a holistic approach to risk, that the branch or the agency or whatever may have you, and again, this scales to what type of entity and what type of business, that those risks can be cared for, and there's U.S. specific attention for those risks. I've talked about AML and the importance of having a robust AML program, an AML officer, AML transaction monitoring rules, AML onboarding processes that care for U.S. specificity, I think are important. And particularly with the branch, there's a lot of focus on liquidity and funding. The branch does not have, besides the capital equivalency deposit, there's really not a concept of capital, but there's a lot of focus on branch funding. And is the branch too dependent on the parent for sources of funding? How self-sufficient is the branch? Going back all the way to 2008, one of the big issues in the financial crisis was that the U.S. was subsidizing a lot of home countries in terms of funding. And so the regulators are very sensitive to the branch funding profile, intercompany funding, net due to, due from positions. And I think there's a lot of focus on branch stress testing, liquidity management, liquidity buffer. And as the bigger you get, the more you got to do there. One of the things in the U.S. that's a big focus is reg reporting. Smaller branches have less to do here. They have the 002 report, the call report, which is kind of, it's a glorified, extended, balance sheet income statement. But there are some granular reporting schedules. There's granular reporting breakouts on loans. There's granular reporting things on derivatives. And U.S. regulators care deeply about data quality and having good data governance supporting the information that they're using to provide supervision. And the information that's coming in front of the bank management team, can they rely on that risk and financial information? So that's probably as much as I would go into some comments. I'll turn to you, Bo, and Rich and Cliff, if you wanted to jump in. But Bo, anything jump out at you, particularly maybe as you were kind of building the new framework that you built for foreign banks entering in Georgia? Anything you wanted to double down on your perspective?
Yeah, so I agree with all your comments. And first off, these slides on 16 and 17 are just fantastic. To me, it really hits at a high level everything that is important. So I don't want to say this is the most important because they're all really important. But the one thing that you hit on was the management team and the experience that team has that is so important. And even though we rebuilt our framework, and so we don't have a foreign bank branch here in Georgia, we can leverage off of our other experience and within the community bank space. And so even though we've got new community banks, what we've seen is those community banks that get it right, they get the right team that aligns with their business plan out of the gate, they're very successful. But those that don't have the right mix, they struggle until they get there. And so to me, it's not just someone that's got the experience that aligns with the business plan. That's very important. And then 3 lines of defense. I mean, AML, BSA, OFAC, that is critically important. Regulators are going to be looking at that very closely with foreign banks because that, got a couple of red flags, transactions going back and forth, the U.S. and a foreign country, and they're large dollar amounts. So that really has to be built out. And I guess the final thing that I would point on, which is even if you're starting up a bank or a foreign bank branch, succession planning is important. And I know we say that with our community banks when they're coming in, they're like, I'm just trying to start a bank. Why are you kind of taking me down the road? Well, I think the reality is we have such consolidation going on right now in the financial industry. And so that needs to be thought about. And I personally don't believe that your succession plan can't be, well, when it's time to change management, we're going to go outside and grab someone. That just doesn't work. I think, or it works sometimes, but it's not a great plan. I think you need to be very deliberative and internally start developing that team.
Thank you, Bo. Cliff, Rich, anything you guys want to add?
No, that was really good. Thank you.
Okay, I think Cliff, if I'm not mistaken, we're going to go to you next, where we're going to get a little bit on, kind of how supervision and oversight works in the U.S. Over to you.
Great. If we could go to the next slide. So really just a few points on this, and I mentioned it earlier, which is the role of the Federal Reserve. The Federal Reserve is, call it the gatekeeper for market entry into the United States. They're the first sort of look at the consolidated supervision in the foreign country. They're also sort of the gatekeeper in terms of initial market entry for a rep office or for a branch. They also have an ongoing supervisory responsibility, in particular with regard to state branches. And so that just keep in mind that the Fed is there. They have a primary role in terms of entry into the United States. as mentioned here on this slide, there is a filing called a Form KR2. And the reason I wanted to draw attention to that is, and we sort of spoke to this earlier, is the importance of that, and Richard mentioned sort of the pre-filing meeting, for example, that if you're going to want to enter the United States, it's not just a matter of filing an application and waiting for a response. It's super important, going back to the management discussion as well, to kind of come to the table, to spend time with the regulators, to talk to them, present to them your business plan, the purposes of the office that you want to establish or the new office that you want to establish, and sort of socialize it with them up front. There is, however, this form for new market entry, and that will be a detailed review of your strategy, operation structure, ownership questions about the FBO, what the intent and the purposes are of the new office, compliance procedures, everything else that's going to be built out and necessary depending upon the nature and aspects of the office that's proposed. So super important to come to the table and have that discussion. And just to make a bit of distinction there is a licensing aspect, and then there's the Federal Reserve aspect. The licensing is a license for a branch or an agency is granted by either the OCC or a state. The Fed has a different role to play alongside that licensing activity, but all are important, super important to sort of hit the right note from the beginning. And then the last point on this slide is that the fact of an application is public. And so it is subject to public comment. It is subject to, input. And so you should just be aware going in that anything you do in the US, there will be a public aspect of it once you decide to file. And Rich, I think I turn it over to you from here.
Okay, so one point, just building on Cliff's comments, when we look at representative offices, which we talked a little bit about earlier, there is no OCC de novo representative office authority. If you are entering the United States for the first time and you're doing through a representative office, that is a state and Fed process. If you want to do an OCC, what is the equivalent of a representative office, you first have to have a US branch of your bank, and then that US branch can offer a loan production office or there's a series of non-branch offices the OCC has authority to authorize in the banking context, and that's what's leveraged. So again, if you're thinking about a rep office, you don't have this dual system at the get-go. It would be something you could do later. So let's get into the confidential rating system. So when we say confidential, that means the rating that you get is confidential supervisory information, and it is unlawful for an entity to disclose that or any of these ratings publicly. And banks need to have policies and processes around that to protect that information, including sometimes vis-a-vis disclosure to affiliates. And there's even been questions around the head office, but I won't digress. So foreign banks, they get privileges when they have a branch in the United States. As we talked about, they can take deposits, they can make loans broadly, they get access to Fed accounts in the discount window. And, with these privileges come regulation, supervision. Of course, part of supervision is examination. And the banks, foreign bank branches, are required to be examined annually. That would be done if it's a federal branch by the OCC, if it's a state branch by a combination of the state or states and the Federal Reserve. So what does the scorecard look like? Well, it's transparent here, although not disclosed. It's ROCA, which covers risk management, operational controls, compliance, and asset quality. And if you want further information on this, there are detailed supervision manuals published by the Fed, hundreds of pages that go into each one of these categories and go into the ratings for each one of these categories and the composite rating. So for each one of these components, you get a rating of from 1 to 5, 1 being very strong and 5 being really unsatisfactory. The real sort of test here is if you are a 1 or 2. If you're a 1 or 2 composite, you're satisfactory, you're well managed. If you are 3, 4, or 5, you are facing a few things. One, you're facing the likelihood of potential public enforcement action. A consent order could lead ultimately to civil money penalties, could ultimately lead to delicensing kind of activities. But importantly, if you're not a 1 or 2, when you want to do things like open another branch, do an acquisition, it informs the sort of regulatory supervision review, even your sort of your application process. So you get again, you get a 1 through 5, you want to aim for a 1 or 2. In addition, we're not going to touch on this today, but there's a separate rating that the Fed does for sort of consolidated US operations for the larger financial institution, foreign banking organizations there. To make things more complex, it's 3 things they look at: capital, liquidity, governance, and controls. And to make things more complex, it's not a 1 through 5 system. It's 4 different categories which aren't numbered. But again, that's for the larger institution. So that is, I think, the examination overview in a nutshell. And unless anybody wants to add anything else, I think we're going to move on to Bo.
Thanks, Rich. Yeah, move for a couple slides. Thank you. I think this is sort of, I guess I put my economic development hat on here. Georgia is very much a pro-business state. We have been ranked #1 state to do business by Site Selection magazine for the last 12 years. And that's because of a number of factors. One, we're home to, Atlanta's home to Hartsfield-Jackson, which is the world's busiest airport. I think you can virtually fly just about anywhere in the world from there directly. We've got 2 of the largest, 2 very large ports in Brunswick and Savannah, and a very extensive rail network. Also, we have the 2nd largest labor force in the Southeast, and the #1 workforce training program in the United States. But the talent's not just at a high level. We've got some talent in the financial services space as well. Approximately 70% of the payment transactions in the U.S. flow through Georgia-based companies. That's why Atlanta has earned the nickname of Transaction Alley. And then there's the FinTech Academy that's structured to help build and develop financial services talent that's here in Atlanta. But on top of that, Georgia's a great place to work. We have 4 seasons. I will admit, though, summer is the longest of the 4. In addition to that, according to FEMA, we have the lowest risk rating for natural disasters in the Southeast. That said, I think recently Forbes indicated that Atlanta was the #2 city to live in the United States. So there are a number of factors out there that are listed on the slide that I've identified that are causing businesses to move into Georgia, right, in both domestic and international companies. And I think that our foreign bank structure that we have in place is also incredibly compelling. As I indicated earlier, we try to take a best-in-class approach from Georgia, from the OCC, as well as other leading state banks, and built that out. And the reality is that there is, as Cliff indicated, there's a tremendous amount of overlap, but there's some key differences that we see there. One is the assessments that we charge. We are among the lowest states from an assessments on what we're charging foreign banks. In addition, if you look at the capital equivalency deposit versus the asset pledge that we have, my understanding running those numbers that we are going to be significantly less than the OCC in that regard. We have an expedited, really robust expedited application process for highly rated or well-rated foreign banks. And in addition, we also, our application process, we are going to take, if an application has to be submitted to the Fed, we're going to accept that application and not require duplicate responses. In addition, and maybe more importantly, I think is a little bit of our sort of philosophy here at the department. We've got an open door. So if anyone is interested in having a charter or a license with us, You can meet with me and senior staff. I'm happy to meet with you here on phone, via Teams, and not just at the application process when we get you in the door, but even when you're operating. And if there's any questions on the operational side of things. Not all regulators take that approach. I think that in addition, that unlike the federal banking agencies as well, that and both Cliff and Richard were talking about this, the pendulum swinging. I think what we try to do is be very cognizant and be apolitical when it comes for our financial regulatory approach, and that we don't think safety and soundness should depend on which party you're from. And historically, we've been pretty successful at the department because the commissioners have been internally developed individuals as opposing to be external political appointees. And I guess the final point I want to make is, again, just reiterate, one of our core focuses is economic progress, which we have to balance with safety and soundness and consumer protection. But one of the ways that manifests itself is, again, the open door approach is that we are willing to meet with, if you've got a concern and you're a licensed or regulated entity, bring it to us. And, I'm not going to promise you that I'll make a change, but I promise that I'll evaluate it looking at those three factors. And so, as the slide indicates, our foreign bank law, we updated it in 2023, and then in 2024, the following year, we revised our rules. And this all came about with a conversation that I had with Rich over lunch, where he asked the very simple question of, why does Georgia law not permit foreign banks to take deposits, foreign bank branches to take deposits? And so I looked at it, did a little research, and determined that we were really an outlier in that regard, and so weighed it from a safety and soundness perspective. And the easy answer would have been, well, let's just make a real quick change to the law and say that you can take deposits. But that wasn't the right answer, because our law really hadn't been touched meaningfully for 50 years. So what can we do? So, we reached out again with the experts, had those conversations, and really worked to try to develop a modern approach with a lot of clarity. And I say all this not to toot the collective horn, but just to emphasize that, that is the department's approach, that if there is a gap or a deficiency that's brought to our attention, we are going to take it under consideration, and we're going to make the change as long as we can do it consistently with safety and soundness. And so I think with the next slide is going to deal with the CLE code, accreditation affirmation code. I apologize for credit. And that is AB 8745. We'll leave that up for a little bit longer.
Thank you, Bo. That was fantastic. And I do think a big accomplishment to get that law updated in 2023, 2024. And I know on a personal basis, it will also cement Rich Mumford's legacy in the industry, because he also loves the state of Georgia, I think, a lot. And I appreciate you bringing up that comment as well. But I think it's a great example of a constructive rule-based approach to how to enter the U.S. market. With that, I think we have about a few minutes for questions and comments and final thoughts. Maybe I'll just kind of go around a little bit. Cliff, as you listen to this today, and I talked a little bit about some of my personal lessons learned as folks have entered the U.S. or set up foreign banking operations or have dealt with reg remediation. Is there something that kind of you reflect on in this conversation you want to kind of reinforce, or something that you think is really important for our audience?
Yeah, thanks, Richard. The one thing that occurs to me, and it comes from experience, is the necessity to do your homework on the front end and really be thoughtful about your options on the front end. And that if you've got a sort of a client-driven, industry-driven, just a market-driven strategy to expand in the U.S., there are all these options that we've been discussing. There are some considerations in opting for various modes of entry, if you will, and you need to do your homework on the front end. And the second point, I guess, is what we've been talking about engaging with the regulators. There's a moment in time where you've got enough, you've done your homework, you've got your strategy together, it's appropriate to go and talk to the regulators and get some feedback and create that conversation, which will only, help you succeed in the longer term. So those are my broader thoughts. Thanks.
Thank you, Cliff. What about you, Rich? Being in the seat, both the regulator seat, but also advising your bank management team as you reflect on this conversation. Anything you want to double down on?
Yeah, look, I would look at this in the context of, in my case, 40 years in this business, having cut my teeth during a very strong deregulatory period in the 80s when thrifts were deregulated following a period of high inflation. And I think we're seeing that now. We're seeing very much a deregulatory emphasis, and that's starting very much on the supervision side and applications and regulations. I think we'll see more action on that as we move forward. But that leads me to the general comment, Richard, you've heard me say this before. It's really time to rethink the possible. We had been in a situation where I think oftentimes our answer to banks was no, that's going to be the answer, but what's your question? I think that has changed. So I think there's clearly a receptivity in this new administration and with the banking agencies to things that are more innovative, things like partnering you mentioned earlier, banking as a service. And we've even seen things in terms of restructurings that were not possible before that are now being considered very seriously and in some cases approved. So that includes, sort of things in the Reg W space for those of you who are, sort of more deeply immersed in this market, affiliate transactions. So I think all of that is true, but I come back to, I think what is the other theme here, and Bo will support, and as a former supervisor, and Cliff spent that time as well within the Fed. These folks still have a job to do. They still have statutory standards. They still don't want to see failures, violations of law, AML, et cetera. So you still need to dot your I's, cross your T's, aim before you fire, do the right prep work, have the right people. And I think that, those are still table stakes, regardless of what you may be reading, which a lot of it is true, about a much more favorable, at least, federal regulatory environment.
Thank you, Rich. I would leave you with one final thought too. One of my mentors and great colleagues, Irina Getchis-McCarthy, was part of the regulatory team. I think there's two questions we often talk to each other about. Who do you want to be when you grow up? So Cliff made that point about what's your strategy and what do you want to do? And really taking the high road. In taking Rich's advice, you can still mitigate risks and you can still balance controls and you can still innovate responsibly. And I think you heard that come across from Bo. So don't look for the regulator to tell you how to mitigate that risk. Lean into the business model and really understand the risks that business is facing and try to deal with them. I think that's the world we're in, and that the 3 lines of defense is really going to be the 3 lines of defense. I know we say that, but and so with that, I would say thank you for making time. Thank you for sticking with us. Thank you to the IIB. To Beth is fantastic. And thank you to my colleagues and other panelists. It was a pleasure, Rich, Bo, and Cliff. And we will leave it there. Thank you.
Thank you.